Okay, so what my trade is to sell GU from 1.5925 with a 50 pip stop with a target of 160 odd pips. Sorry, with a target 1 of 90 pips and with a target 2 of 226 pips. How did I come to this conclusion? Number one, I checked the trade the news. I checked trade the news to see whether there is some ground-breaking, shattering news uh, which would affect the GBP and the USD, or which will change the market dynamic. Uh, we had the Fed funds rate target, but it was more or less as expected, and I do not believe there has been a gigantic shift in the currents of the market. So now I'm looking to reverse whatever movement has happened because of a knee-jerk reaction. So that's the reason why I looked at my currency mirror, and the currency meter told me that the GBP, the US dollar was falling in value, while as the GBP was gaining in value. That means that news event affected both the USD as well as the GBP. It gave me a chance to look into the trade, and I looked at my 5-minute chart. And the 5-minute chart, I drew a a Fibonacci retracement line, and my 78.6 retracement happened to be 1.5931-ish area, which is very close to what my entry level would be. Not only that, we had previous support, which now has perhaps turned into resistance 3 times on the 5-minute chart. So price might not in fact go and touch this resistance, and that's the reason why I am more comfortable selling it at, or attempting to sell it at 6 pips below my exact retracement level. Not only that, we have a Fibonacci extension line, and the Fibonacci extension line, though it's not a confluence of events, the extension of the 161.80% of this entire move and the 200% of this entire move is right at the middle of both those values is at 1.5931. So being a bit more aggressive, I have decided to go short on the 1.5925 based on the 5-minute chart. But I do not look at just the 5-minute chart. I made a top-down analysis. I looked at the daily chart. The daily chart gives me an uptrend. However, we are seeing a topping out formation. There could be two things. If it's a topping down out formation, maybe it falls back to this trend line and wants to continue forward, or there is a new shift in the trend line. In any case, even if there is a shift in the trend line, or if there's a new trend line being formed, or this is a true top and the market has changed its direction and is now moving downwards, in any case, I think it's prudent to go short, because there is a lot of room to go short on the daily chart. I looked at the 4-hour chart. At the 4-hour chart, we see a topping formation. However, we have a potential channel formation. We have one low out here and another low out here. We have one high here, and I'm going to see whether the support line might hold true. So I drew a parallel line of this low to this low and I made it into a parallel line, and I'm assuming if this is a channel, I will stay within that channel, and the next 4 hour resistance level of that particular channel is going to be at 1.5925 ish area. That's another reason of why I am looking to go short from the 1.5925 area. Besides that, we looked at the 60-minute chart. The 60-minute chart is giving us a topping formation. It is retracing back and trying to maybe break these highs, but if it fails to do so, it will be a change in the trend, and in that case, our short entry would mean a very good entry. Right, even these particular support turn resistance lines out here, support, now resistance, support, falls into 1.5925. That's why I believe 1.5925 is a very good handle. Now I've made my entry. The next step is to have a decent stop loss and a decent take profit level. For that, I come down again to my 240 time frame chart. For my take profit level number 1, which is about 90 pips, I have the take profit at 1.5837, because if in case it goes up and tries to come down, and even if it's not a new channel formation, it'll at least retrace a little bit, and I want to be able to get out at a profit when it actually does that. So that's my idea of going my target one of 58.37, which is about 90 pips from my entry price. Plus, in case this is an actual channel formation, we'd have it come down and retest the lows out here and retest the support, the downward sloping support line now, which would mean that we'd have about 260 pips. So now we have a potential target of 90 pips and 260 pips. An ideal stop loss, let me just pull up the 60-minute time frame. An ideal stop loss would be above these handles high out here, but that is about 75 pips from my entry. Another way of placing my stop loss would be to place my stop loss above these highs here. So that gives me a 50 pip stop loss. I'm more comfortable taking that 50 pip stop loss, though an ideal stop loss would be a 75 pip stop loss. Anyway, a 50 pip mental stop loss can sometimes turn into a 55, 60, 70 pip actual stop loss, because it might not give you a chance to exit. So all in all, that's what my basis of my trade is. And you all have any other questions?